Good morning, and welcome to episode 219 of Getting Rich. I'm your host, Rich Checkan, president of Asset Strategies International, and today is Wednesday, April 9th, 2025. President Zelensky of the Ukraine has announced that they have captured Chinese nationals fighting alongside Russian soldiers in the Russian-Ukraine conflict. This development has the potential to either stall or destroy current ceasefire talks between the Russia and Ukraine. We'll see how it develops. The U.S. and Iran are set to speak on Saturday in direct negotiations regarding Iran's nuclear program. But the big news this past week is clearly the escalating trade war between the U.S. and dozens of countries around the world. Most notably, and the most recent development has been the U.S. bumping trade tariffs with China to 104%. And the Chinese government has come back and vowed that they are prepared for a fight to the end on this global trade war. The big casualties have been the equities markets. Starting last week, the Dow, the NASDAQ, the S&P have all seen major pullbacks. And my question to you is, how do you see the end of this trade war coming about? When do you see the end of this trade war coming about? I have some ideas on the opportunity the trade war is creating, but first let me go ahead and share our numbers for the week. And they're all down. So gold is down 2.8%, trading at $3,047.80. It was trading last week at $3,134.20. Silver, big loser in the precious metals complex this week, down 10.5%, trading at $30.55. It was $34.15 last week. Platinum down 5.6% to $936 an ounce. It was $92 a week ago. And palladium down 7.3%, also to $936 an ounce. It was $1,010 an ounce last week, with silver falling much further than gold. This past week, the gold-silver ratio, or the number of ounces of silver it takes to buy an ounce of gold, has shot up to 99.76. It was over 100 at one point this past week. Last week, the number was 91.78. And the U.S. dollar, amidst all this trade war talk, is continuing to slip. It's down to 102.31 on the index this week. It was 103.85 last week. Now again, we're seeing an opportunity amidst the trade war in precious metals. So the precious metals were surging. We had gold nearing $3,200 an ounce. We had silver over $34 an ounce. And with the pullback in the stock markets, we saw gold and silver initially pull back as well. Gold dipped below $3,000 an ounce. Silver dipped below $30 an ounce. And, the thought right away comes to people's minds, this is my wealth insurance. The stock market's collapsing. Where is gold when I need it? Why is the price falling when the stock market's falling? And you got to understand, folks, this is a temporary state. We see this behavior every single time there is a precipitous force in equities markets, or precipitous fall in equities markets. We see gold and silver selling off too initially. And you got to understand what's going on here. So we have leveraged positions. So people borrowed money to go ahead and place bets in the stock market. The stock market fell precipitously. And as a result, the value of their accounts is well below their loan value. And guess what? There's a margin call. They have to go ahead and come up with the cash to bridge the gap between the asset value and the value of the loan they took out to own those assets. Where do they go to get that money? Where do they go to get that cash? Well, they go to the most liquid portion of their portfolio, gold and silver. So gold and silver, oftentimes with a precipitous fall in equities, will get sold off initially too, as they investors raise cash to meet their margin calls. But gold and silver at that point are not falling on their fundamentals. They're there and people are tapping into their wealth insurance to protect their positions. So what happens is immediately you see bargain hunters swoop in and buy gold and silver that are cheaper than they ought to be. Just in this past week, again, gold's down almost 3%. Silver is down 10.5%. But they're climbing back up again. So the smart investors are taking advantage of this opportunity. They're not panicking. They're not scared. They're not fearful. They are embracing this short-term aberration in the market to take advantage of gold and silver prices that are lower than they ought to be. And I highly suggest that you do the same. Right now, there's no better way to keep what's yours than to take advantage of this dip over the past few days. As always, we like you to go ahead and subscribe to our YouTube channel, like us, send us your comments and questions, tell us your thoughts on tariffs. We want to hear them. Go ahead and follow us on social media, take our twice weekly, always something interesting newsletters and our once monthly information line newsletter. But in the end, don't ever forget, getting rich starts with keeping what's yours.